In this video, we're going to go over how to process discounts, vendor refunds, and or bonuses from vendors. So one of the critical things to remember is when creating invoices, if we're creating an invoice against a product or an inventory item, the system always wants a inventory move, either an in or an out move to match that invoice or credit note. So one of the scenarios that you run into often is we create the purchase order, we receive the products, we get the bill for it, and then there's an issue with the invoice. The vendor maybe charged the wrong amount or forgot to give us a discount, or maybe we did phenomenal sales in a particular period, so the vendor went ahead and gave us a special discount or commission due to our volume, and then we can use that credit for other items. So one of the things that you don't want to do is you don't want to go into a vendor, an existing bill, and then add a credit note and say, hey, I'm doing a full refund or a partial refund, reverse it. And then one of the things is, oh, well, they gave me $100 discount on each of these line items, so I want to do $100 off each item and create a credit note. Well, if I do that, what happens if you look at the journal items, it's going to make some entries into cost of goods sold. If they're trackable parts, it's going to mess up the interim accounts, thinking that, hey, we got a credit because we returned one of each of these items. However, that's not the case. That's not actually what happened. So when doing credit notes or receiving credit notes from a vendor that's not specific to an actual returned item or to an inventory move, what you actually want to do is just go into the accounting module, go to vendors, click on refunds, create a new one. We're going to come in here and grab our Paul Cross vendor, and we can just add a line. You don't have to select a product. You can create a custom product if it's something you're doing a lot that will have as a service product that will have the details for you, so you don't have to type them out every time. But if this is just an occasional thing, we come in here and just say credit for high sales. Okay. And then you just have to pick your account of where you want that credit to go towards. So in this case, maybe we'll call it an other income. It's not an ordinary business item. We're going to do quantity 1, and they're going to give us a credit of, say, our $200. Okay. So that's going to be able to create a generic credit note still tied to the vendor. It's not going to be linked specifically to a purchase order. Obviously, we have to select our bill date, but we don't want to tie this or link this to a product if it is not directly related to the receiving or returning of a product, or it will throw your interim accounts off. So you can create them just like this. If you look at the journal items, we just have our other income entry, our accounts payable, and there's no, in this case, there's no tax. So that's the key distinction is if you're returning inventory, then you want to return it against the purchase order, and then you can create the credit note against that purchase order. But if you're just getting generic credits from a vendor for whatever reason that's not specific to a return or a receipt, then just do a generic line, give it a name so you know what it was for, pick your account that you want the value of that to be booked towards, and post it, move on. Don't select an actual inventory product.